Hola mi gente and welcome back to the channel. This is Sean from We Are Investing and we're going to talk about stocks, baby. But before we proceed into the stock picks for this video, I just want to give you guys a little bit of encouragement. I know that some of you guys have been commenting on my videos saying that the stock market is extremely difficult right now and you're a little bit discouraged. Do not be discouraged. This is part of the process. Investing in the stock market is a long-term game in order to get your long-term gains. This is a process. There are ups and downs, and the downs are actually where you learn the most. I know myself included over the last year have had a lot of really good picks. We doubled up on a ton of positions, but everyone is a genius during a bull market. It's when we start to see corrections and we start to see a bear market potentially where we find out where the real investors are. Now, myself included, I had positions where I lost a lot of money in. I closed out on some of the growth stocks that I thought were extremely overvalued. I'm not in a lot of the speculative plays. I closed out of a lot of my SPACs, but some of my growth and tech stocks like PayPal really suffered over the last couple weeks, but I'm not selling that stock. I'm probably going to add to it when I think it's at a good valuation, but it's not at that point yet, and it could drop even more, and I completely understand that. The market right now is going through a rotation, and it's going to go through this rotation until this 10-year treasury yield gets under control, and that could take months. So we're going to see a constant battle between tech and value, and reopening trades are really prospering right now, and certain sectors are doing really well while others are not. So there's money to be made. Like Jim Cramer says, there's always a bull market. You just need to find it. However, I will say this. The market that we experienced over the last year was extremely bullish. There was so much money being put into the markets that gains were insane. And I don't think that you should expect those kinds of gains moving forward. Getting 2x in a couple weeks in a position, that is not normal. What was happening before was great, but it's probably not going to continue. But with that being said, you can still make a lot of money, and you got to remember that this is a long-term gain in order to get your long-term gains. Because if you stick through this process, through the ups and downs, that is how you're going to accumulate real wealth. Now, with all that being said, guys, if you want to follow us on our journey and be part of this journey together where we can grow together and learn together, then click on the link below to join the community through the Patreon. It gives you access to the portfolio. You get to see what I'm buying. You also get to communicate with all of us on a daily basis through the Discord where we talk stocks on the daily. A link is provided down below. And before we dive any further into this video, hit that subscribe button, ring that bell if you haven't already so that YouTube can notify you when I upload new videos, and smash that like button. And do me a favor, comment down below in what stocks you're interested. Provide the ticker and a brief reason why you're interested in them, and maybe we can undiscover a new stock together and we can bring it to the attention of the community as well. All right, the first stock that I want to talk about, and this has been a position of ours for a very long time. This is one of the few SPACs that we held through a merger, and we are still holding today, and it's a 3Xer. This is MP Materials. Now, I'm not going to recommend, well, I'm not going to tell you what to do ever in any of these videos, but in my personal opinion, if I wasn't already in this stock, I wouldn't get into it right now. But I'm going to add this to my watch list 100% if I wasn't already in it, and buy in a dip. Whenever this stock shows weakness in over the next month or so, it's a buying opportunity, because in my personal opinion, I think over the next year, there's going to be a lot of stuff for rare earth mining. We're going to see a crunch in the supply chain for these rare earth materials. They're needed in so many things, including the electric motors of electric vehicles. They're included in drones, your cell phones, so many things that these materials are crucial, and it's a huge issue right now. And we're probably going to continue to see, or probably an increase in government funding for rare earth material, where MP Materials would be a beneficiary of all of that. So I definitely think that this stock still has room to run and is probably going to be a good play for 2021. However, valuation at some point is going to start to be rich, where then you would sell into the strength because there's probably going to be a dip if it starts to run too high. But right now, I still think it has room to run. I just wouldn't be a buyer at this price. I would wait for a dip and buy on the bounce. So MP Materials isn't a stock that I would buy right now. It's something I would add to my watch list, like I said before. But this stock is a stock that I would be a buyer at today's price. I think that this stock just is going to go up, all right? I think it's going to go up a lot. And that is Chewy, ticker symbol CHWY on the New York Stock Exchange. Now, this stock is trading at a share price of $82.53. Over the last 3 months, it's down 17.58%. It's down a decent amount. It is, I would consider it somewhat of a tech company. It is a growth stock, and those stocks have been hit hard. But this one hasn't been hit as hard as some of the others, but around 20% is a decent drop. Now, this is a growth stock that I think is reasonably priced. I would put it in that category of growth at a reasonable price. And so it's something that I am okay investing in right now, even with this rotation. Now, Chewy to me is a company that I want to invest in long term because, in my personal opinion, they dominate their space, and the macroeconomics behind this whole business model just makes sense, and there's a lot of tailwinds here. During the pandemic, a lot of pets were bought because people were lonely. They were sitting at home all the time. It's a perfect time to own a pet. And people are not just going to get rid of their pets. They're their pets for the rest of the pet's life. And these pets are going to need supplies. They're going to need food. And I think as a customer of Chewy, the platform is great, and shopping online is, you just can't beat it. It's so convenient. They just deliver it right to your door, and the company is leading in that space. So I definitely think that business is going to continue to grow, and it's going to grow at a great rate. Another factor that I didn't even consider for the macroeconomics that was brought to my attention from a CNBC article, a shift to suburbs is fueling company growth. I didn't even think about this. All these people that are moving away from the cities, moving away from apartments that did not allow pets into suburban areas where they can then have a pet, that is increasing the total addressable market for Chewy, and that is absolutely a good thing. And that just goes to show another macroeconomic reason why I think Chewy stock makes sense. Now, it's a long-term hold for me. I am buying into weakness. I am not selling into strength. I think the stock is going to set new all-time highs, and it's going to continue upwards. The valuation for the company right now is fair in my personal opinion. They are experiencing great growth, and I like the price right now for Chewy stock. And to throw a cherry on top of all of that, it was included in today's episode of CNBC Fast Trade. Steve Grasso picked it. Jim Cramer talked about it the other day, but I've been talking about Chewy stock for a couple weeks now. I included it in a prior video. I already have a position in Chewy stock, and I'm adding to it. All right, another stock that I want to talk about on this video is Ford, ticker symbol F on the New York Stock Exchange. Now, if you've been following this channel, if you're included in the Patreon, you know that I have Ford. I bought Leaps for Ford, and they're absolutely crushing it right now. I looked at Ford a couple months ago and thought the company was extremely undervalued and it needs to be re-rated as an electric vehicle play. And this summer, this spring is going to be big time for Ford stock. Also, you threw in the possibility of them being part of the USPS contract, which they are. That was an added bonus to the stock. Now, I think Ford is doing great things. I think that they are ahead of some of the competition. Obviously not Tesla, because they've been dominating this space for a while, but Ford is coming out with an electric Mustang that is coming out this spring. The Bronco, although not electric, is mad sexy, and I think that is a market, a niche market that is going to continue to sell and sell and sell. And you throw in the F-150, which is the most sold vehicle in the world, I believe, if not definitely in the United States, and that is an added bonus to Ford stock. And they are going to take that F-150 electric. So in my personal opinion, I just think the company has so much tailwinds that it made sense to get into Ford at under $10 a share, which we did. And right now it's trading much higher. Now today, an analyst from Barclays put a price target on Ford stock at $16 a share, which means that there is still upside in his personal opinion. Now, when analysts start including price targets for stocks, that could mean that hedge funds are starting to get into these stocks as well. Because although these analysts are supposed to be independent analysts and thinking for themselves, you know the influence hedge funds on Wall Street have on these analysts. It's been proven time and time again that sometimes they contact analysts or journalists to pump up a stock for them at the end of the quarter, so that way they have a profitable quarter and they keep their 1% and they keep their rich clients. Now, I do think that Wall Street is going to get behind Ford stock and General Motors stock. And instead of trying to fight Wall Street, I am glad that I got into this stock early on and let Wall Street do the work for me. I'd rather have them do the work for me than constantly fight them and be against them here. If they're on my side, then I think my odds are pretty good here. And I don't want to speculate, but I'm going to include this in this video. I think that Ford, General Motors, if there is money from the government for electric vehicles, I think it's those two companies that are going to receive a good chunk of that money, because Joe Biden, who did he bail out when he was vice president? Ford and General Motors. And you take a look at this, and you take a look at who's the Secretary of Energy. It is the former governor of Michigan. So I think that there are a lot of signs here, and it makes sense. Ford and General Motors have a lot of lobbyists and a lot of lobbying power that Tesla does not have, and some of these startups definitely do not have, that it's a good chance that if there's any government spending in this sector, it's going to go Ford and General Motors' way. And between those two companies, my pick was Ford, because, well, I have a Ford, I have an F-150, and I'd like that they're coming out with vehicles this summer. Now, this is iffy if you want to get into the stock right now, because we did just have a round of good news. So maybe that starts to fade out and we see a dip in Ford stock. But at the price right now, I still think it's decent. I would definitely buy on a dip. But I think that this stock is probably going to go to $20 within the next year or year and a half as it continues to get re-rated and looked at as an EV play. And we start to see sales come out for their Ford Mustang, and we start to get more news on other production vehicles. In that analyst ratings, he is speculating that Ford's going to come out with 2 new production vehicles that are electric vehicles this spring. And that could be a huge catalyst for Ford stock as well. Now, it's funny that this stock is continuing to go up while a lot of the other electric vehicle stocks are starting to drop. And that has to do with valuation. Ford is trading at a extreme discount when you compare it to other EV stocks, and I think there needs to be a re-rating, and I think that is happening now, and that is why Ford stock continues to climb higher. Alright guys, but that wraps it up. If you liked the video, do me a huge favor and hit that subscribe button and ring that bell, most importantly, so that you can be part of the notification gang, so that way you do not miss another video when I upload, and you can hit the comment section first and let me know what stock you're interested in. But you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya.